So I wanted to make a video real quick tonight to talk about an article that I'd read the other day, and it was talking about asset managers and their role in the economy, and how there had been a move and kind of a push recently by some members of the Financial Stability Board and the International Organization of Securities Commissions to label some certain asset managers and large funds as significantly important financial institutions, or SIFIs um, for short. And this is something that I talked about. If I don't know if everyone remembers the last, or not the last video, but one of my previous videos I discussed GE Capital and how General Electric was going to be selling off all of their assets for GE Capital and winding that down, even though it was very profitable and it had accounted for a large amount of the profits for General Electric. It was just too risky and very volatile, and they wanted to be removed from the list of significantly important financial institutions. And so this is going to be interesting to see how the fund managers react to this proposal. Of course, they're going to push back against it. They're not going to be happy with it, but it's going to be interesting to see how this affects their profits and their bottom line and everything, and how they run their funds. I do know that I was reading about how a lot of the fund managers they are better prepared to handle large cash outflows um, from their funds this time around than they were back in the Great Recession, because they made a lot of changes since then, as far as improving their risk management practices and also working to comply with new regulations, so they have more cash on hand, and so there wouldn't be a large asset sell-off by the managers in order to cover the losses associated with large outflows of investors. And the reason why the investors would be, potentially leaving these funds in droves is because of an interest rate hike by the Federal Reserve, which is expected to happen sometime before the end of 2015. So that's definitely something to watch, and something that's going to be of great interest to investors and asset managers. However, it looks like the asset managers are better equipped and more prepared to handle an expected rate increase by the Federal Reserve this time than they were in previous years. So that's good news. But again, I would definitely be looking out for it and watching the news reports and keeping an eye on seeing if the Financial Stability Board or the International Organization of Securities Commissions decides to label certain some of the largest funds as significantly important financial institutions in the near-term future. So, in the near term, I guess in this case, it means by next year, because things like that take a lot of time, regulatory changes. So it would possibly be next year. And I do know that the Dodd-Frank Act, which was passed after the Great Recession, the financial crisis hit, that it's still being rolled out today. I think there's a lot of provisions and rules that haven't even been written. So even if they make the decision within the next year or two, label them as SIFIs, I think it would take several years for the effect to fully be felt by all the funds. So that's the latest episode of Business with Chad, and have a great day.